Hello, members of KCA University Tax Society, and welcome for this training. My name is CPF Austin Winsley, your patron, and also the director, KCA University Professional and Technical Institute. We are doing this recording as part of the ongoing series on tax literacy, a program which is offered by KCA University in collaboration with Kenya Revenue Authority Tax Education Division. Right, this video will train you how to file pay-as-you-earn return. Pay-as-you-earn return is a return that is filed by employers on monthly basis. Employers are required by law to file return and deduct or remit the tax that is payable on their employees. And therefore, there's that return that they have to remit actually before the 9th day of the following month after they have made payments to their employees. That is what we call the P-10 return. And I demonstrate to you how to do this by using the form which I've already downloaded. Employers must have a form that looks like this. You'll go to iTax, send employer, and download a form. Should look like this. P monthly return. Remember, it is monthly. There's an illustration which will require you to use this return, but I just take you through the basics, how the form looks like. You start by entering the PIN of the employer. You must have the PIN of the employer. And let us assume that our PIN is like this. This is just a dummy PIN number, assuming an employer, that is their PIN. Sorry, employer's PIN, I think they end with you. Type of return is always original return. The meaning of amended return, for your information, is if you filed a return and there was an error, you file another one, which is amended return. Entity type, there are two options, head office or branch. You choose as appropriate. Return period, let us say 01 to mean January 2024. And then end 31st 01 2024. It is a month. So you enter the first date of the month and the last date of that month. It's a monthly return, this one. And then we can go to next. Next is where you populate details of your employees. You enter the details of your employees, as many as you have. Each, you must enter their detail. And let us say your first employee, PIN of that first employee is A00 1 2 3 4 5 6 7 3. Hope I did not enter excess details. I call this employee Ken Mary. Residential status, I assume that this is a resident. Type of employee, there's something I need to demonstrate concerning type of employee. And type of employee, this one, I say primary. Shortly, I demonstrate to you the difference between primary and secondary. You are going to see it here. So we are going to have 200,000, just assuming that this guy is getting 200,000. House allowance, if your employee is getting house allowance, you enter the amount. Assume that doesn't have, you enter 0. Remember employment benefits. We have already covered employment benefits. Now, this is the real thing. If there are those benefits, you enter here. Leave pay. Employees, when they are going on leave, they'll be paid some leave. Some other cases, we work overtime and we are paid overtime allowance. If there's overtime allowance, you enter there. Director's fee, you enter there, director's fee. If there is none, you enter 0. Lump sum, let us assume 0. And other allowance, if any, you enter it. We don't have. So in total, this guy has been paid 200,000 in total. Value of car benefit. I use another employee to show you how we deal with car, or let me use this particular employee, car benefit. Now, if your employee has car benefit, what you do is you go to sheet D, and sheet D will help you do car benefit. We end up in of our employee, and I think it was like this. And then reference section, we are referring to employee benefits, that one. Car registration number, something like this. Make, very important, remember the section we talked about car benefits. Make, it will be a Toyota, it will be a Mercedes, it will be. What's important is really here. What affects the tax computation is there. And that's why they're giving you listing. CC rating of this Toyota, let us say is 1500 cc. And then next is you are required to say cost of this car, or rather type. We say whether it is hired or it is owned. I'm going to show you something. Difference, I say it is owned. And the cost of this car, the cost of that car that is owned, remember we use 24%, rather 2%, 24% is per annum. The cost of this car, let me give it 1 million, and you see what happens. The value of this car shall be 2% of the cost, which is 1 million. Allow me to change this and say, can you see the cost of hiring has been grayed out, meaning because we have already chosen it is owned. Suppose I said it is hired. The cost of the car is deleted, and then we enter, we have entered details of the cost of leasing. So the cost of leasing, we enter that it's leased at 30,000 shillings a month. And you can see now the value of the car becomes 30,000. So it's very important how you enter the type of car. Is it leased or it is hired? And when you go to Section 5 of the Income Tax Act, it explains all these things that iTax is doing, they have their root from the Income Tax Act. Now, assume that this employee has this car of 30,000. We needed that sheet to come and calculate here, 30,000. Do we have other benefits? And non-cash benefits, I say zero. I keep saying zero. Global director, nothing. Type of housing. If the employee is housed by the employer, you'll have to choose. But I say that this one has no house, and you can see that one for global income has become active. Now, keep moving. Where does 230 come from? It was the car plus the gross pay of 200, the car of 30, and then the gross pay. Actual contribution towards pension. You'll need the actual contribution that this employee is making towards pension. Let us assume that is paying, we're just assuming the illustration gives us 13,000 is what this employee is paying towards pension. Now, mortgage, zero. If the employee has mortgage, enter the mortgage interest that they are paying, but don't enter an amount that is in excess of 25,000. If it is, let's say this employee is paying mortgage interest of 30,000, you'll enter 25. If you enter more than 25, iTax should not accept. Now, we end up with 217. Where does 217 come from? 217 is 230, you remember 230 minus the 13, which is the contribution towards pension. Monthly relief for employees shall be 2,400. And then insurance relief, let us assume for this employee that is paying some insurance relief because of NHIF, I'll give you the NHIF schedule so that you know how much people are paying for insurance relief. 800 shillings. Then let's make it 800 shillings. Now, this is the tax that this employee needs to pay. Then we keep scrolling so that I show you something different here. Keep scrolling. I love my second employee. I write the number A00 1 2 3 4 5 6 8V, so that I have a different PIN. And I call this one Lucy Simon. Is she resident? Yes, she's resident. There's a difference if you are going to say she's non-resident. What I want to demonstrate to you is if this is not a primary employee, then will be a secondary employee. Secondary employee are those employees who have another employer. How? It's very common with universities. You could be a lecturer of Nairobi University, but you sneak out, or whichever way, you find yourself at KCA University doing part-time teaching. At KCA, you'll be a secondary employee. At Nairobi University, you'll be a primary employee. A doctor employed by Nairobi Hospital, primary employer, goes to Aga Khan becomes secondary. So this is for secondary employee. Secondary employee, let us give him 230. I'm using 230. Why? Because this one had 200 and then we added 30. I want the amount to be same so that you notice some difference. 0 for these benefits, keep adding 0. Don't skip, keep adding 0, keep adding 0, keep adding 0. Lump sum, 0. Then value of car benefit, 0 as well. Other benefits, 0. Now, this one of housing is not given housing, and the global income becomes active. I know what is the meaning of this global income, but it's too much detail to explain. Now, I want you to notice something here. The difference between primary and secondary employee. One, this one, we are not, there is no option for pension. Where were we? I want to see where we compute pension. This one was not given that option of pension. And then NHF, because it's compulsory for all, we have it here. We can assume same amount, 800. But I want you to take note of the significant difference between the tax on the primary employer and the tax on the secondary employer. Their basic salary is the same, 230. But see what happens. Close to, this is over 20,000 difference. Why is it so? Why is it so? Reason is simple, is because secondary employees will be taxed at a flat rate of 30%. You can confirm 230 multiplied by 30%, it will give you. And this relief, did you notice the section for monthly relief was grayed out? Was grayed out. Now, self-assessed amount shall be 56. We repeat the same amount, 683.35. And we repeat here, 79,700. We repeat that. That becomes our self-assessed amount. Yes. Now, there's another category of employees I need to demonstrate how we deal with them. Disabled employees. These are persons with disabilities. Now, with persons with disabilities, there's special tax treatment of persons with disabilities. we are going to enter the PIN of this employee, A 0012345669V. See how I'm guessing my PIN. As long as it has the right digits, it will pick. Remember, this is dummy illustration. Name of this employee, Zeph Kim. Okay, residential status, resident type primary. Now, this is the most important thing. Exemption certificate number. If you're a person with disability, you don't just imagine it. You don't just imagine you have a disability, like the way some of us are losing eyesight gradually, and then you say, because of this, I'll go to my employer and tell them I'm partially blind. No, you must go to the National Council for Persons with Disabilities. They assess you and they actually declare you to be a person with disability. They'll give you a certificate and will go ahead and process with KRA your exemption so that you get exemption. Exemption of what? Let us just enter the number, exemption certificate number. Basic salary, let us give this guy 200,000 shillings. 200,000 shillings. House allowance, 0. Transport, 0. Leave pay, 0. Remember, if these guys have leave pay, you have to record it. Value of car, I showed you how to compute car, but for now we'll have to ignore it. Type of housing, not given, but if it is given, then we see how it is computed. Now, amount of pension. Did you see for secondary employees, we never had this. Pension contribution, we must have the actual amount, but for the time being, let me assume 12,000 shillings for illustration's sake. Now, exemption for persons with disability. It is 150,000. If you're a person with disability, you are exempted up to 100 for the first 150,000. This guy with disability will be taxed on 50,000. Why? Is the 200, this one we assumed as a salary of 200,000 minus 150. So it'll be left with 50. Now, how much are we asking to pay? 38. That 50 minus 12, because there's a deduction for the pension. What we are saying is persons with disability were earning salaries of less than 150,000. Those ones do not know what tax is. For some good reason, affirmative action. Insurance relief, let me assume some amount of 800. Let us see the amount that this guy is paying as tax. 2983, 2983. 0.35. Okay, that is how you deal with this person with disability. I need to mention something before we leave. Now, we're in the basic for ordinary employees. I mean those ones without disabilities. We have entered only 2. Now look, if we are assuming 3 employees, if we had 4, we would come here, add rows, keep on adding rows, like that. Now, if you have 4, we can add 2 more rows. If you have 5, we can add 3 more. Tell me if you have 20, if you have 100 employees, if you have like KRA as over 6,000 employees, you keep on adding rows and entering details this manually for your 6,000 employees. TSC, Teacher Service Commission, over 300 employees. So do they enter? And remember, PS1 applies for these employees. What happens is there's a special form that is known as CS V, comma separated values, CSV, that you create, and then that form you can generate it using your accounting system, the ERP, and then you import, and it loads all the details here. There's that way of making it practical for those employers with many employees. Now, there are so many sheets that will come across, and for the time being, I not want to talk about them. I only want to talk about this one that is known as FBT. I not invent details for this FBT. FBT means fringe benefit tax. Fringe benefit tax is for loans that have been given by the employer at an interest rate that is lower than the prescribed rate of interest. So the prescribed rate of interest is the rate for treasury bill and so forth. So let's say as an employee, you are given a loan at 2%, and now the prescribed rate of interest is 12%. That difference of 10% is an employment benefit, okay? And it is collected together with pay as you earn. But I need to tell you that that benefit is assessed not on the employee, but on the employer. The thing is, you'll have to come and enter here details of these employees with these loans attracting interest at a low rate. Enter their details here, and you'll enter the loan interest amount, and you'll come here and enter the prescribed rate. You must be told the commissioner will publish details of the prescribed rates. On every quarter, he'll publish these details. So in the illustration that I've given, you'll come across an employee who has some loan provided by the employer at a low interest rate. It gives rise to fringe benefit tax. Tax payment. This is advance payment of pay as you earn. Let us leave that one out. Now, we are on this special thing that is known as affordable housing. ID number of the member, 1, 2, 3, 4, 5, 6, 7, 8. Name of member. Now, do I remember the names of these members? One was Ken Max. KRA PIN was A00123456 7V. Gross salary, I remember it was 230. Do you remember that? Okay. The next one, ID number 1234578. Are they enough digits? There's something known as validating, but it's not sensitive on this one. It is very sensitive on the PIN. The next employee, what was the name of the second employee? Whichever, Jim. PIN, the only thing that we reject is if we enter wrong PIN format. A00123456 The salary of the second employee, remember that guy was a secondary employee. We still pay the affordable housing for this guy. Okay? And now, let us watch and see. For the employer, member contribution, that is the employer, 3450. How do you arrive at 3450? Is 1.5% of 230, and then 3450. Let me show you something. Look, number of employees, there are 3. Okay? Now, this housing levy, 2. If we make a mistake, we are already reporting ourselves because our PS1 has 3 employees. The third employee is that one with disability. So we must come here, add a row, just one, and we'll write the details of this employee, the ID number of that employee. I remember she was Lucy Simon. And enter a PIN, A0012345669V. and our salary was 200,000. Now with 200,000, you can see with your naked eye that 1.5% of 200,000 is actually 3,000. So persons with disabilities are not exempted from housing levy. So it becomes 300,000. Now, because of this housing levy, and it's on every employee, even those employees with salaries that are below the taxable threshold of 24,000 shillings, you need to capture them and they'll be picked in that sheet. So we have the total contribution towards housing levy. Tax due. Now, see our tax due. You can see employees are 3. Then there's this for the first 2, and then for the one with disability. The one with disability, you can see how little they are paying because of the 150 exemption. Then it flows like this. There's something you need to see here that is known as NITA. NITA contribution is required for every employee. The employer must contribute 50 shillings to National Industrial Training Authority, NITA. 50 shillings for every employee. And that's how we arrive at 150, 3 times 50. Now, we have the amount that we need to pay as pay as you earn. This 159,316.70. And you are ready to file this return. Thank you. This is what we need to know. And you use this information to prepare using this form a return whereby you have been given more employees given all scenarios possible for employment income. So this is good enough, and I'll be giving my contact in case you are stuck in solving the illustration that is given. Thank you.